Okay, I want to start with a number, 38.7%. That is how much BA Financial's earnings per share grew in the first quarter of 2026 compared to a year ago, $1.86 to $2.58. And here is what makes it interesting. The analyst consensus was $2.30. So this is not a slow growth bank muddling along. This is a Tulsa, Oklahoma regional bank that just hit its fourth consecutive earnings beat, and it is doing it quietly.
And quietly is the operative word, Hudson. 7 analysts cover BOKF right now. Every single one of them rates it a hold. The average price target is $138. The stock is at $137. So the street is basically saying, nice bank, fairly priced, nothing to see here. But the operating results keep telling a different story.
Which is exactly what makes this worth spending 15 minutes on. This is BOK Financial Corporation, ticker BOKF, $8.3 billion in market cap, $54 billion in assets, and a track record of beating expectations that would make a lot of banks with double the analyst coverage jealous. I'm Hudson Thomas.
And I'm Lana Chen. Let's dig in.
So let's set the stage. BOK Financial is not a household name unless you live in Oklahoma, Texas, New Mexico, or a handful of other South Central states, but it is a serious bank. Founded in 1910, headquartered in Tulsa, operating under names like Bank of Oklahoma, Bank of Texas, Bank of Albuquerque, and Colorado State Bank.
The geography matters here. Oklahoma is energy country, and BOK Financial has spent over a century building expertise in energy lending. That is not an accident. When you operate in the oil patch for more than 100 years, you develop credit intuition that most banks simply do not have. You learn when to lend and when to walk away.
And here's what surprised me when I first looked at this company. It is not just a lending bank. About 38% of total revenue comes from fee-based businesses: wealth management, mortgage banking, brokerage, energy trading. They manage $126 billion in assets under management, which is a record high as of Q1 2026.
$126 billion in AUM from a bank you have probably never heard of. That is bigger than most dedicated wealth management firms. And it is a crucial part of the story because fee income does not fluctuate with interest rates the way net interest income does. It gives BOK Financial a structural buffer that most pure-play lending banks lack.
5,000 employees. CEO is Stacy Kimes. And there's one fact about the ownership structure that changes how you think about this entire business.
George Kaiser, Tulsa billionaire philanthropist, founder, adjacent controlling shareholder. His family trust owns approximately 57% of BOKF shares outstanding. This bank is not for sale. It has never been for sale. The management team is focused on compounding shareholder value over decades, not quarters.
That 57% ownership stake is the moat wrapped inside the moat. You have the energy lending expertise, the $126 billion wealth platform, and on top of it, an owner-operator structure that keeps discipline front and center. Stacy Kimes joined BOK Financial in 1991. He has been there 35 years. Before becoming CEO in 2019, he was the chief credit officer, meaning the person responsible for deciding who gets loans and who does not.
That background is unusually relevant. Most bank CEOs come up through investment banking or capital markets. Kimes spent his career in credit. His obsession is loan quality, not loan volume. And you see it in the results, a net charge-off rate of 3 basis points for all of fiscal 2025.
3 basis points. For context, the industry average is closer to 30 to 40 basis points. BOKF's losses on bad loans are basically rounding errors. That is not luck. That is a credit culture built over decades.
Institutional investors describe Kimes as disciplined and predictable, 2 words that get used as compliments in banking. He does not make big acquisitions, he does not swing for the fences, he runs the bank for the long term, and the Kaiser family ownership ensures there is no pressure to do anything else.
Okay, Lana, let's talk numbers, because these are the numbers that made me want to do this episode.
Let's start with valuation. BOKF trades at 14.5 times trailing earnings and about 14.1 times the 2026 consensus estimate of $0.74 per share. Price to book is 1.41 times. And here's the regional bank metric that really matters. Price to tangible book value is 1.73 times, with a tangible book value per share of $79.47.
How does that 1.73 times tangible book compare to peers?
It is in the middle of the pack. Commerce Bank Shares trades at about 2.0 times tangible book. Cullen Frost is around 2.1 times. First Horizon is lower, around 1.2 times. So BOKF is valued more cheaply than the Missouri and Texas peers with similar quality franchises, which is part of the bull thesis.
And the quarter that just happened.
First quarter 2026 EP of $2.58 versus the $2.30 consensus estimate. That is a 28 beat or 12.2% above expectations. Net income came in at $155.8 million year over year. EPS grew 38.7% from $1.86 in Q1 2025 to $2.58 today. This is the fourth consecutive EPS beat.
4 straight beats, and not just squeaking by.
No. The Q4 2025 beat was even larger, $2.91 actual versus $2.60 estimate, a beat of 75 cents or about 35%. The momentum has been building, and the engine behind it is net interest income.
Story.
Net interest income rose every single quarter in 2025. $316 million in Q1, $328 million in Q2, $338 million in Q3, $345 million in Q4, each quarter higher than the last. Q1 2026 is tracking at approximately $348 million based on management commentary and rate environment. Net interest margin is pressing toward 3%, up from prior year levels.
And the fee side?
Fee revenue represented about 38% of total revenue in 2025, roughly $801 million for the full year. Wealth management is the largest component, followed by mortgage banking and brokerage. The AUM record of $126 billion is particularly significant because it generates relatively stable advisory fees, regardless of where interest rates go.
Cash flow and balance sheet.
BOKF generated approximately $1.87 billion in operating cash flow on a trailing 12-month basis, with free cash flow around $1.71 billion. The balance sheet has $53.76 billion in total assets, $906 million in cash, and $5.975 billion in total equity. Tangible equity is $4.93 billion after subtracting $1.4 billion in goodwill and intangibles.
Deposits?
Total deposits estimated around $34.5 billion. Borrowed funds approximately $4.6 billion. The bank's CET1 capital ratio is approximately 12.8%. Comfortably above regulatory minimums and providing headroom for continued buybacks and dividend growth.
And speaking of dividends?
Annual dividend is $2.40 per share, paid quarterly at 60 cents. That is a 1.75% yield at the current price. Payout ratio is only about 25%, leaving substantial room for dividend increases. The company also conducts opportunistic buybacks, though the float is somewhat constrained by the Kaiser family's 57% ownership. Overall, BOK Financial's financial health is solid. Consistent NII growth, pristine credit quality, strong capital ratios, and a business model that generates meaningful free cash flow. The caution flags are modest, analyst consensus is neutral, and the forward EPS growth rate of roughly 2 to 3% suggests the market may already be pricing in the current momentum.
So what does Wall Street make of all this?
The consensus is hold across the board, 7 analysts, 0 buy ratings. Barclays is equal weight, Wells Fargo is equal weight, KBW is market perform, RBC Capital is sector perform, Citi is neutral. The average price target is approximately $138 versus the current price of $137.99, essentially zero implied upside.
And 2 recent downgrades.
D.A. Davidson downgraded from buy to neutral in January 2026, citing valuation after BOKF's strong run. Hovde Group downgraded from outperform to market perform in December 2025. Both firms still like the fundamentals. They just think the stock has caught up to the story.
That is a frustrating position to be in if you own it.
It is. But it is worth noting, the analyst community was also neutral or cautious coming into Q1, and the company beat by 28 cents. The track record of beating the consensus is exactly why some longer-term investors keep holding it despite the neutral ratings. Consistent underestimation of BOKF's earnings power is a pattern.
What about forward estimates?
The 5 analyst consensus has FY 2026 EPS at $9.74, rising to $10.26 in 2027 and $10.72 in 2028. Revenue consensus for 2026 is approximately $2.27 billion. If those numbers prove as conservative as recent quarters suggest, there could be upward revisions ahead.
Let me make the bull case. 4 consecutive earnings beats, and not small ones. The bank just demonstrated that NII expansion can generate 38.7% year-over-year EPS growth. When every analyst on the street is at hold with a target that is basically the current price, and the company keeps beating, you get a situation where positive surprises create asymmetric upside. The NEM is approaching 3%. The AUM business is at $126 billion and growing. And you have a 57% controlling owner whose entire financial legacy is tied to this stock. George Kaiser does not get richer unless BOKF shareholders get richer first.
And here is the bear case. The consensus is hold for a reason. The forward EPS growth rate is about 2 to 3% annually through 2028. This is not a high-growth bank. The credit quality that is pristine today is partly a function of energy prices that have been cooperative. If WTI crude falls sustainably below $60, that 3 basis point NCO rate starts moving. And the rate sensitivity cut both ways. Every basis point of NIM expansion that happened when rates rose could reverse if the Fed accelerates cuts through 2026. Finally, the 57% Kaiser ownership that is a bull case anchor is also a liquidity constraint. Big institutions have a hard time building meaningful positions in a stock with only 43% of shares in the float.
Fair points on both sides.
Which is why 7 analysts chose hold.
Let's stack BOKF against some peers. You mentioned Cullen/Frost and Commerce Bank shares.
Right. For regional banks, the key valuation metric is price to tangible book value. BOKF is at 1.73 times. Cullen/Frost, CFR, another South Central bank based in Texas, trades at roughly 2.1 times tangible book. Commerce Bank shares in Missouri is around 2.0 times. First Horizon National, a Southeast regional, is closer to 1.2 times.
So BOKF is cheaper than CFR and CBSH but richer than FHN.
Yes. And the case for closing the gap with CFR and CBSH is the wealth management platform. Cullen/Frost and Commerce Bank shares both carry premium multiples partly because of their fee-based businesses. BOK Financial has $126 billion in AUM. That should command a premium. Whether it does anytime soon depends on whether the broader market starts caring more about this stock.
Which is the core tension in the bull case.
Exactly. The fundamentals argue for a higher multiple. The low analyst coverage and limited float argue against catalysts to get there.
Let's check in on what the options market is saying.
The put-call ratio heading into Q1 results was 0.78, below 1, meaning slightly more call volume than put volume, a modestly bullish lean. Implied volatility sat at the 32nd percentile, which is quite low for an earnings week. The market was not positioned for a big move in either direction. Largest open interest clusters were at the $135 put and $140 call strikes for late April expiration.
Low IV is interesting. Usually the market gets more nervous going into earnings.
For BOKF specifically, the low IV reflects the track record. When a bank beats 4 quarters in a row, the market starts to trust that there is not going to be a big negative surprise. The implied move was roughly 3 to 4% in either direction. With a 28-cents EPS beat, we may see some call-side activity post-announcement.
On the insider side, the big picture is George Kaiser's 57% stake. That alone is the most bullish insider data point you can have. What about recent transactions?
Recent Form 4 filings show 3 small executive sales totaling under $2 million, all from pre-planned 10b5-1 trading plans. These are routine tax withholding transactions, not discretionary exits. No open market purchases were reported in the last 90 days. The absence of insider buying at current prices is consistent with the neutral analyst view that the stock is fairly valued, but it is not a red flag given the Kaiser family's massive static position.
If Kaiser is your anchor, you probably don't need executives buying shares on the open market to make the insider activity story compelling.
Precisely.
Main risks to keep in mind.
Energy concentration is the first. The Oklahoma and Southwest loan book carries above-average exposure to oil and gas. A prolonged decline in crude oil prices would show up in charge-offs. BOKF managed through the 2020 oil crash well, but that was an unusual recovery. The next downturn may not be as V-shaped.
Rate risk?
Significant. The NII expansion story depends on rates staying elevated. If the Fed cuts faster than expected, deposit betas will reset, and NIM could compress. Some of the 38.7% EPS growth from Q1 would be hard to replicate in a falling rate environment.
Key metrics to watch in the coming quarters.
3 things. First, NIM trajectory. Watch for whether BOKF holds above 3% in Q 2026 as deposit pricing normalizes. Second, NCO rate. Any uptick above 10 basis points would warrant attention given the energy concentration. Third, AUM growth. The $126 billion figure needs to keep growing to justify the wealth management premium thesis.
So where does that leave us on BOK Financial?
This is a high-quality regional bank that keeps outperforming its conservative analyst consensus. The operating metrics, NII growth, credit quality, AUM expansion, are genuinely impressive for a bank of this size. The valuation is reasonable at 1.73 times tangible book and 14 times forward earnings. The hold consensus and limited analyst coverage create a situation where positive surprises have outsized impact.
The key metric to watch is NIM. If BOK Financial can hold or expand above 3% net interest margin in Q2 and Q3 2026, while keeping NCO rates near historic lows, the earnings beat streak could extend, and those hold ratings may start getting pressure to move up.
The risk is that this is a rate-sensitive story in a world where the Fed's next move is uncertain. If rate cuts accelerate, the NII tailwind reverses. The energy portfolio is pristine today, but is always one commodity cycle away from stress.
A disciplined, founder-aligned, well-run regional bank trading at fair value. That is the BOKF story in one sentence. We'll leave you with this. Warren Buffett once said, "Risk comes from not knowing what you're doing." BOK Financial has spent 35 years building expertise in exactly the businesses it operates: energy lending, wealth management, regional banking in the South Central Corridor. The 3 basis point charge-off rate is not an accident. It is the output of knowing what you're doing.
That is a very clean line to end on.
That's going to do it for today's episode of Charged Alpha, your S&P 500 stock encyclopedia. We covered BOK Financial Corporation, the Tulsa-based regional bank, delivering 4 consecutive EPS beats while flying almost completely under the radar. If you want to go deeper on BOKF or any other name, we have built 11 free screening tools at chargedalpha.com, covering stocks, ETFs, options, crypto, bonds, REITs, and commodities. No sign-up, no paywall. The same data that powers this show is sitting there waiting for you to run your own screens. Check it out.
Until then, I'm Lana Chen.
And I'm Hudson Thomas. We'll see you next time.
This podcast is for informational and educational purposes only. Nothing discussed today constitutes a buy, sell, or hold recommendation for any security mentioned. All investments carry risk, including the risk of total loss of principal. Past performance does not guarantee future results. Always do your own research and consult with a qualified financial advisor before making any investment decisions. The hosts and producers of Charged Alpha may hold positions in securities discussed on this show. This episode was researched, written, and produced using AI-assisted tools. All data has been aggregated from publicly available sources and may contain inaccuracies. Data is current as of the recording date and may have changed.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.